welcome back, everyone. If there's anybody out in the foyer, maybe you want to come in and join us. And for those of you online, we're going to get started again. We're all back from having a wonderful lunch of very delicious pasta, I have to tell you. So having that nice lunch and then having a little glass of Italian wine, I'm not sure how awake we're all going to be for this next session. But let's, in any event, we're going to try and make it as interesting as possible. So with me, I have two panelists. We don't have anybody joining online, so it'll just be the three of us. And what we thought we would do for this session in particular, just to sort of ratchet up a notch and also just to keep you interested coming back after lunch, is that we would have a bit of a free flow discussion. So not necessarily following sort of the traditional sort of panel where someone speaks for 10 minutes and then another person speaks for 10 minutes. We thought what we would do amongst ourselves, and then really looking for a lot of interaction from some of you on the floor as well, is just to have more of a dialogue, between development partners, as it were, talking about sort of our recent experiences and challenges in implementing secure transactions reform, but also talking about where do we think some of this stuff is going in the future as well. And we thought we would ground some of that, particularly, looking at the model law for secured transactions and other model laws that are being developed. So like warehouse receipts, for example, or factoring and leasing. I know there's a whole bunch of work going on in a lot of different areas that touch on this, but also sort of weave that into the real practical application of these model laws at the ground level. So within embedding that in the country context and then taking it further down, and then actually, the real challenges on the ground when you're trying to implement these things as it relates to any number of aspects of project implementation. So that's kind of what we're going to do for the next 45 minutes. We thought we would hold about 10-15 minutes towards the end for questions and answers and maybe questions to any of us, but I'll moderate and maybe I'll kick it off with Catherine Marsh, who is from the ADB, and she's the senior legal counsel for ADB's non-sovereign operations. So we're going to ask Catherine, what exactly does that mean and what does she do? And what is ADB doing in this space? So we'll start with her, and then after she gives us a little bit of an overview of what ADB has been up to in this space. And I know some of her colleagues going back a long, long time, but first time meeting Catherine this week. And then also have another colleague from EBRD with Milot, Ahma, and also listening to and him sharing what he's doing as part of his legal counsel responsibilities within the financial law unit of EBRD. So what is EBRD doing in the space of secure transactions reform, and sort of getting some forward-looking insights into where do we see some of this law evolving to as it matures in the number of different regions in which we work. So maybe, Catherine, I'll kick it over to you for a few minutes just to spend some time. Tell us who you are and what you're working on. And we'll go from there.
Thank you, Elaine. Kathy, please.
Okay.
My name's Kathy Marsh, and my official title is Assistant General Counsel for Non-Sovereign Operations. What does that mean? That means that I head up the legal team at ADB that covers everything private sector that ADB does. So that's the translation of my title. And that encompasses, obviously the private sector transactional work of ADB, but, also the policy and most pertinent for this forum, the law and policy reform work that we do at ADB also. So our law and policy reform work is done on a slightly different basis, certainly to how EBRD is organized to do that. And, I think IFC also. We have a very, very small dedicated law and policy reform unit within our legal department, where we have one lawyer focused full-time on law and policy reform, and then others within the OGC, the Office of General Counsel, do it, as the night job, let's put it that way. My team probably contributes the greatest number of lawyers out of the legal department to those who are night jobbing on law and policy reform. And the areas that we have been looking at collectively that are more private sector focused include implementation of the model law on arbitration across a variety of jurisdictions at this point. We've done a fair bit of work on insolvency law reform, companies law reform in various jurisdictions, including creating companies registries and so on. And we're just starting to implement a project on the implementation of Milot, the electronic transactions model law. Again, we're looking at a few jurisdictions for that. We'll take them one at a time, hopefully, if we can persuade our business folk that that's the sensible approach. So that's me. That's, what we do. We do not have, an entire sort of mapped out work program for our law and policy reform work. It is more driven by what we see in our transactions as gaps, the individual interests that people have, because this is largely a night job at the end of the day. And also, of course, our overall constraint of the need to be invited by our member governments to look at legal reform in our developing member countries.
That sounds great. Thank you for that little self-introduction. But I think it's always good, to have people introduce themselves, and then they can sort of synthesize the key areas of focus and help us to really just appreciate who you are and what you're doing and the areas of interest that you're working on. So Milot, over to you to tell us a little bit about yourself and what EBRD is doing in this space.
Yeah. Thank you very much, Elaine. First of all, thank you to the executive committee for extending the invitation to us to participate in the conference and to also speak. So my name is Milot. I'm a legal counsel at the EBRD's legal transition team. It's a team, I used to say a small team, but we're expanding year on year. So I don't know if we're qualified as a small team, but we are within the Office of General Counsel, and we've been doing legal reform since '93. So we've established our presence within the EBRD. So it's a bit, so we're recognized internally as the legal reform people. So within the legal transition team, we have a financial law unit. We deal with secure transactions and fintech. We deal with insolvency and restructuring, but also with corporate governance. So these, it's within these three areas that I've been working mostly, but focusing on access to finance and fintech, which is my current focus right now. And within that area, we've always kind of been working on secure transactions since 1993. So we've amassed quite a bit of knowledge and quite a big portfolio on that over the years, and always working with institutions such as Ancestral and Unidraw, and always essentially promoting the international best practice. If you go and look into our terms of reference, that's always the keyword everywhere. So in that sense, in terms of like the direction of work and where work is going in our sort of department, we have this sort of direction at the strategic level of the bank. So if you look at the bank strategy, they're saying that we are only going to engage in the next 5 years in operations that are either green, inclusive, or digital, with a sort of well-governed also angle being mentioned there. But so everything that we do has to have one of those three sort of qualities, and our work on secure transactions, that's why nowadays it's kind of switching towards also like the more digital. We need to have those digital angles there to kind of promote. So we are promoting that. The extent to which they can actually be established in a certain country is also another sort of discussion, or something that we find out once we go on the project. But that's, let's say, the idea behind most of our projects now. So one of those three. But yeah, our work on so we do work on secure transactions essentially in general, so movables, pledge, mortgages, but we also work on so that was the more traditional work which we started us off. But then we also work on factoring and leasing for many years. That's what we've been doing. And recently, since 2018, 17, we've been also working on fintech. So we work on products such as crowdfunding, and we also have a paper out on smart contracts. So both of them were kind of published at the same time to kind of, and that's what sort of took off our work on fintech, which is now quite sizable, and it keeps us busy for some of the time.
No, it was excellent. Thanks, Milot. So maybe I'll just take a couple of minutes and also just introduce myself. So I'm Elaine MacEachern. Some of you know me as the World Bank Group IFC lead for our global credit infrastructure program. So from our perspective, credit infrastructure covers credit reporting and information sharing and secure transactions and asset-based lending. So I'm based in Washington, DC, but spent a number of years, almost 10 years actually, sitting in East Asia Pacific region before moving to DC just prior to COVID. And in terms of IFC's work, or the World Bank Group's work, I should say, it's longstanding in this space, as some of you would know, going back more than 20 years. And in fact, my first introduction to international development as it relates to secure transactions law was actually doing work for ADB. Back in 2003. So go back to ADB for a long time, who was actually very big in this space for many, many years, I have to say. And then probably about 10 years ago, worked with EBRD in Mongolia as a joint project. So I know both of these institutions and have worked with their colleagues a long, long time. So it's great to have them here. In terms of IFC's portfolio, it's fairly substantive in this space, and we've been doing it, as I said, for probably at least 2006 in a much more systematic way, I would say. And so the portfolio has grown from really just looking at phase one activities, which is the legal and regulatory reform and the implementation of the registry systems and the some institutional capacity building, to really now it's quite evolved into a portfolio of about on the secure transactions side of the business, about 75 projects that we're looking at globally. So we're in all regions, everywhere we go. You probably see us talking about STR, and which is a good thing, I think. But more interesting than that, the program has really evolved into what we sort of have as our approach to the market is the phase one activities, which is the enabling environment. But what we've known since we've implemented these projects over this vast number of years is that you really have to do multiple phases to get the adoption rate and the development impact on the ground. So we're moving into our phase twos to phase threes, we kind of broadly call market development. So looking at the broader ecosystem and saying what are the gaps in that ecosystem to support the adoption and uptake of the reform, to get that development impact. And then phase threes, you're looking at, now into sort of market deepening is what we call it. And that's really when you're getting into big, securitization deals, right? So you have to be fairly far along the reform journey when you're getting into phase threes and phase fours. So that's a little bit about sort of what we're doing in this space over the last number of years. Unlike my two colleagues beside me, we do have a number of experts in the regions, and that, generally up until about 18 months ago was their day job. But our resources have been scaled back. But that's not to say that our donors have not been, continued to be very committed to this work. And in fact, I would just take this opportunity to say that our largest donor, who is SECO, so the Swiss Development Corporation, has continued to fund us and will be signing next week. In fact, the official signing will happen on the next tranche of money to cover us for the next 5 years for a $20 million trust fund. It's the largest trust fund that IFC has. So SECO is committed to delivering this. We, under the program, are committed to delivering this and staying quite relevant in this space. So we're quite excited about that, I think. And we're also quite excited to look at, because as we had spoken earlier, the resources are getting smaller and smaller, right? And actually the expertise in the area is getting harder and harder to find. So I think it's forcing us actually to find ways to collaborate more, right? And to do more on the collaboration side and more on the coordination side, and on the coordination side as well. And so I think maybe we could talk a little bit about just how we do that now, and then also just weave in maybe some practical experiences so people can have an appreciation for, how do we make that coordination work on the ground as it relates to the secure transactions reform work that somewhat happens up at this level, and then you sort of distilling that down to taking the international model laws, making those fit for purpose and then within the country context at the national level, and then getting the adoption from the ground level up. So I think it would be interesting for us maybe to have a little conversation around that, because I think some of you might find that interesting. And then we can maybe go into some specific examples, or that might take us down a different path. The idea is that we're going to have a bit of a free-flowing discussion here, just to really share experiences, and for all of you just to get an appreciation of, sometimes strategically how we approach the work, but other times, more tactically what we have to do, and just illustrate that by, sharing some country examples and stuff. So maybe, Kathy, do you want to maybe jump in?
Yeah, no, thank you, Elaine. And we were sort of chatting earlier about, boots on the ground experience, I think is, how we would put that. And I mean, I completely agree with your observations, Elaine, around, resource constraints and the need for, increased and broader cooperation. I think particularly, amongst, the three of us as institutions, as well as, the broader community represented here as well. I think that's, really critical, in fact, particularly, looking forward, because I think that resources are only going to become more and more constrained as I just look forward in time. And, that's against a backdrop of seeing more and more work to be done. So it's that sort of perfect storm environment in that sense.
Yeah, exactly. Yeah.
So in just, fully agree on the resource thing and the that we need to collaborate way more. I think some of the sort of examples and the way we do it is sort of our sort of constant, let's say, so discussions that we have with various IFC interlocutors, sometimes with the ADB. But I think we have more overlap with IFC in terms of the geographical scope on various topics. I was covering some other topics in the past, and depending on the topic, we would be speaking to IFC on the ground, because we would usually be doing complementary activities. And as we discussed before, I think we would overlap at times. Maybe we would be picking up someone else's work. So EBRD picking up your work, or you picking up EBRD's work. But the most important thing was to actually deliver the same message, to speak with one voice to the audience, which, can be easily confused in our clients, essentially. So I think something that comes to mind is a project we had in Morocco, where we developed the pledge sort of registry legislation. The IFC took it over with the actual registry, the infrastructure. And we're looking to do something like that now in Uzbekistan, where we're working together with IFC in the same working group on factoring. But that's sort of the IFC already has plans for the platform and how to actually follow up the work once the legislation is there. And that's actually what we want to see. We want to see the legislation actually be used in practice. And as what Ignacio was saying yesterday about sort of the pre-draft and post-draft work, so the implementation work, we as organizations sit on two camps, but they are very different camps. And I think it was acknowledged in many discussions that we had here, that they're two very different realities. And it's usually a reality check when you go on the ground with boots on the ground and you're hit with this, okay, there is the model law and best practice. Sometimes you have countries which want to align with best practice, but I don't know if they know what they really want. I don't know if they know exactly what it means to align with that. Once they understand, which is usually at probably the later stages of actual drafting the law, this is where we have issues, and this is where we have them actually taken aback a bit and say, hold on, there is this massive infrastructural sort of obstacle in front of us. We need to set up this registry now. Oh, and a lot of these, we're speaking about the one registry, a lot of these existing registries are fiddly. They're not very friendly if you want to go, and they're not very fast sometimes. There are all sorts of issues. And then they're like, oh, so we need now, what you were saying before, to maintain this. This is what we need to do. So that's something that we kind of try to explain from the beginning, the expectations, so that we have the managed essentially, and they know what they're getting into if they want to fully align with something. But it's usually the case. We don't really have many cases of 100% sort of alignment. We're working with Marek now, for example, in a certain jurisdiction, and they already want alignment with the draft law, the draft model law on factoring. And when we deliver it, they are essentially, oh, but what does it mean? Why are we now providing essentially loans secured by receivables, assignment by way of security? Why is this also not that? How does it fit? Because, you know, in jurisdictions where you're not starting from scratch, but there is a bit of an established practice, sometimes it's harder. Sometimes it's harder because you have banks who's like, oh, okay, but we're not interested in that. So you may lose even what you already have. So it's always a balance. So that's something we're grappling. So the draft model law issues we're already grappling with, even though it's still a draft. And yeah, I think some of them are kind of there's a bit of a pattern around some of the issues that we're facing. But yeah, we understand that this is the stand, the international best practice. This is how it should be done. And when we were discussing yesterday about the model law on secure transactions being the actual level where we want them to be, and model law on factoring being the actual somewhere in between where they're not ready to do that. So even within the model law on factoring, there may be certain things which may have to be staged in a way to kind of like put it in a like phased. That's the better word. Yeah.
No. And just picking up on you know, some of your thoughts there, you know, one thing that we do see, and again, sort of bringing it back, Marek, to, you know, what you were talking about earlier, you were giving the example of, you know, having multiple registries, and in a way that's a sort of, you know, that's a blessing in disguise, right? So, you know, I know of jurisdiction where, you know, a beautiful new law is introduced, it, you know, ticks all the boxes for, you know, international best practice, et cetera, et cetera. But the implementation of that law is entirely dependent upon the creation of a registry. And we're now X number of years post, you know, legislation, and there is no registry still. So, you know, I'd rather have too many registries than, you know, no registries in that sense. And I think that, you know, the other point again that you were touching on when you were speaking earlier went to, you know, when you have this multiplicity of registries, you know, how do you determine priority? Now that problem in and of itself presupposes that there is a pretty solid insolvency regime in place in that jurisdiction. If you don't have a, you know, a sensible insolvency regime, then priority is, you know, it's irrelevant, right? Who, you know, in that sense, who cares? And so I think that, you know, there's always that need to sort of take that step back, you know, and then once you've taken that step back, take another step back as well, and just look at some of those very basic core elements that are actually needed for any secured transactions reform to actually be successful, because you can't just, you know, have it in isolation without the surrounding infrastructure, the surrounding legal infrastructure.
Yeah, I think, and just to sort of add on to this, and just in terms of some of the collaboration that we as sort of IFC and the team have done with both institutions. I mean, a lot of our funding comes from donors, right? And there are certain restrictions on how that funds, how those funds can be used. So for example, you know, we're not allowed to buy hardware and software with it, right? But from an ADB point of view, I mean, they've got a lot more flexibility with their funding and how that can be utilized. So in the case of Bhutan, for example, where we've worked, ADB funded the hardware and the software, and then we brought in the expertise to actually do the implementation. And I thought the partnership worked really, really well, and it benefited both institutions. And then obviously the end beneficiary was, you know, very grateful for that collaboration. And I think in the case of the EBRD, at least from my, you know, working with EBRD, you know, EBRD started in Mongolia, for example, right? With drafting the pledge law there. And then we came in and helped with the implementation of the registry after the fact. So there's some good examples of some of that collaboration, but I do think that there's probably as the space evolves and gets a little bit more mature, and then transactions start to get a little bit more sophisticated, I think also, and the capacity of the countries start to realize the benefit of the underlying legislation and what they can do with it, I think there'll probably be more need for more of this collaboration just because they don't have that capacity on the ground to do that themselves. So they'll probably be looking maybe towards us to help to do a lot of that, I would think. But I'd be interested also just to hear your thoughts, both of you, on sort of when we talk about capacity building, there's so many layers to capacity building, I think, right? So one, there's just sort of distilling that information. So you have this new piece of legislation that's coming in and being implemented, and you have the primary users of that, right? So, you know, the financial institutions, the legal community, to a certain extent, which we haven't seen the uptick of, which I keep promoting, but I would like to see it more in the academia space in those local countries. So do you have a secure transactions course in your law school, for example, right? You're not necessarily going to see that at that level. So you've got sort of dissemination of that and sensitizing people to this new legal framework. Then you have the building of the capacity of the users to be able to leverage that to innovate in terms of the introduction of new financial products. And then you've go now a step further. So, you know, things have fallen apart and we find ourselves in court. And so now the enforcement mechanisms kick in. So you need to train the judiciary. And I think we all know training judiciary is not the easiest thing to do. But even a step below that is training the bailiffs who have to go out and seize the asset, or the police force, right? And then how do you do that in a way that's peaceful? And so there's layers of capacity building that have to happen. And then within the scopes of our projects, you sort of, you know, how far or how deep do you go? So I'd be interested to hear if you have any experiences in terms of how you approach that. Do you kind of say, this is the scope of our project and we're stopping here? Or do you sort of look at a cradle to grave kind of approach, maybe? Any thoughts on that?
Yeah. So on the capacity building front, so as I said, at the legal transition team, we have the financial law unit, but then outside the financial law unit, we have our dispute resolution team. So they work mostly on the training side. So, but even within a project which I would be leading, for example, on secure transactions, I would be having a training component, but it would be almost the immediate training needs, essentially. If we're talking to a regulator, training the regulator as to like what are the novelties that this is bringing and what is expected from them. Further down the chain, for example, especially if it's judges, if it's bailiffs, we would be essentially sending it to that team of ours, who are internal people, and they would be then designing a full training program. And then, of course, funding being available, they would be delivering that, but it's usually like a chain that goes. Sometimes they do things which are like maybe not necessarily related to a project which I'm doing. Maybe if there is a need on something, legislation is okay, but there's a need to train and to raise capacities. But what we do as part of our projects as well is this sort of the outreach component, which is also some type of capacity building, but it's mostly around the way we promote a certain sort of product that we're bringing to the market. And in this sense, we kind of, especially when we've been factoring and if we're bringing a new product, I mentioned that we'd also do some fintech thing, crowdfunding. We kind of need three parties to tango. We need one, the regulator, two, the actual offer side, the financial institutions, and three, the SMEs. We need the SMEs there to kind of provide that demand, to understand the products, that they go and ask for it. And it's usually, as we were discussing, it's usually that in these, when we bring all of these together at the same table after a certain project, SMEs bring the absolute best feedback, the most useful feedback, because banks are coming from a position of, this is the product that we're offering, or this is the most that we're thinking of offering, but we're not really sure yet. But at the end of the day, they have their own processes, they have their own procedures which constrain them. And in a lot of these countries, then you have the SMEs are like, okay, perfect. This is like two banks offering factoring, for example, but is it really factoring? Is it actually providing the benefits that you, EBRD, are saying that factoring should provide? Because what I'm getting from my bank, I'm getting something on very onerous terms. I'm getting something on a recourse basis. I'm not getting anything I'm supposed to get here. I would rather just go with an overdraft, get the money in, and finish and then return it. No hassle. I'm used to that. Why do I get it? So it's these type of discussions that are enticed by like a completely different, let's say, audience to what we are usually sort of discussing with. And these are the chambers of commerce who bring sort of who we invite into our events. And they're usually very good into, sometimes that's the first time they hear about factoring. So they start thinking about it. So it's a bit, but this is mostly on when we're offering a certain product. But yeah, that's sort of like another angle, which is educating the audience and knowing the audience. But then, of course, that's the whole another angle of the capacity building. And you mentioned also like lawyers. We need, sometimes lawyers don't understand what factoring is because it hasn't been used in a certain country. And you need them to be able to give advice to a potential investor to say, this is what you can, this is what you can do. Sometimes factoring provisions are hidden somewhere in the broad secure transactions framework. And I'm not sure if all of them can provide the right advice to actually entice a particular investor to say, yeah, maybe we can actually go. So in a lot of these countries, so the interlocutors vary in our capacity building exercises. But I think we are also, when you were saying like where, so you were mentioning the phases that the IFC is actually doing when they're doing projects. We have recently sort of starting recently, which is like a bit unfortunately, but also it's a constraint, resource constraint on our side. We're starting to look at what do we consider to be an impact. So do we have, for example, what Mark I think said earlier about this legislative, measurable legislative sort of result. That used to be sort of, I do that, I tick the box, the law is there. But then what happens after that? We go 2 years after there and there's nothing happening. We either went too far, we went too low, something is happening, or what you were saying, the enabling framework is really not there. So that also kind of impacts who do we speak to, where do we go, like what do we need to do for this? Because, you know, now with this digital economy and everything, you need, if we want new entrants, because what I'm saying about banks offering products on maybe non-favorable terms sometimes, you want new entrants to come there and put some competitiveness in the market. And usually, if you want someone to come in, you have these business models that rely on digital delivery that are the most attractive to investors. And you just can't do that in a certain country. Maybe there is a law, but there is something else that actually prevents you from doing. So this is the enabling framework. And that's why maybe if it's not sort of conducive to these business models, which actually are better business propositions for a lot of investors, maybe that's why you don't have it. So we kind of looking at the impact on the ground. So how many new entrants do we need? New entrants? How many new entrants are there? What's the volume of transactions? So, and that's, so if you want a volume of transactions, we need more SMEs to demand it. So yeah.
Yeah, it's a bit of a chicken and egg.
Yeah, no, I mean, it is a chicken and egg. You're absolutely right, Elaine. And I mean, I think the digital point is a very interesting one as well, because I think that what we will, see more and more of is, a leapfrogging. So Elaine, you were speaking earlier about, leapfrogging. And we all saw that, 10, 15, 20 years ago in terms of, mobile phones versus, fixed line telephony, right? Where the developing world forgot that they were meant to do fixed line telephony first and, just went straight to mobiles. And I think we'll see more of that actually, as, the digital asset world expands. Interesting, very interesting times.
Yeah. So I wanted to actually pick up on this impact. Thank you. I wanted to pick up on the impact part of what Milot said, just in terms of because a lot of our reforms, particularly we have an indicator. It's called a DE, so development effectiveness, and all of our projects at the end of the 3, 4, 5 year project timeline have to get this DE rating. So of course, it's not just measured on the amount. Did you implement a law? Check the box, right? Did you set up the registry? Is there, some level of volume going through there? And is that enough? So for us, we're starting to now look at our monitoring and evaluation framework and sort of saying, okay, we need to see actual behavioral change, lending behavior change in the country. So if you go into the financial institutions, have they changed their risk management assessment practices? Is that embedded in their policies and procedures? are the central bankers, when they go on site to do on-site inspection, checking the file and saying, oh, is this a perfected security interest by registration, right? Show me where the evidentiary proof is from the system that you actually registered that thing or you searched. So we're starting to look at these behavioral changes and measuring those as a way to see the uptake. Now, what's pushing us in that direction, and it's quite, I think, this was a little bit telling on a couple of different levels, but one of the things we've always measured is value of financing facilitated, and was like, how many loans are going through there? You know, aggregate them up and, oh yes, we hit this target, we did a great job, right? But what's been more interesting in recent years is we have a number of projects, but one I'll take as an example, where we have a beautiful piece of legislation in there. It would meet, you know, all of best practices, rated by Doing Business, to the extent that Doing Business rates the Strength of Legal Rights Index on that. It was the top #1 in Africa, was #2 globally in that year. Registry system operates fine. It would be state-of-the-art registry, great team behind it operating the registry system. And then when you look at the transaction volumes going through there, there's only 900 a year. And you're saying, okay, well, something's not right, right? You got a population of about 15 million people. There should be more than 1,000 transactions on movable property per year. So you then go, so we did this whole data analysis exercise to see, well, like, what's going on? And why isn't the adoption rate and the innovation happening in the market that we anticipated? So we looked at what was being reported to the central bank on movable asset-based lending, and there was 40,000 transactions, right? So now you've got 40,000 being reported to the central bank, only 1,000 being registered at the registry. It tells you the adoption's not working, right? It tells you you have to do more capacity building. So capacity building, and we had already done 37 workshops, trained 1,500 people, were in every province in the country. So it was a nationwide event, and still you're not getting that uptake. And so you have to sort of question, okay, well, what are we doing wrong? Because the enabling environment is right. So there must be other things in the ecosystem that are not working, right? That are contributing to this. And so, we started with that premise, and then we've done a number of other things to try and recalibrate, but and identify what these problems are. But I think until you start to go in and dig down deep and sort of lift up the covers, as it were, it's not just enough to put in the law and the registry. You have to do these multiple phases that go on for years and years and years. So we've been in Vietnam, for example, since 2006. IFC has started work. They're still in there. And now you're starting to see exponential trajectory in terms of growth and development that we can tie back to the reform, but it's taken like 15, 18 years to get there, right? And then here we're doing these projects, and we're expecting, you know, by the end of that project, you're gonna see this impact on the ground within 12 months or something. I mean, this is a substantive change to an economy, and you're asking people to change the way they do business practices that they've been doing for years. So I just think sort of this, you know, stats don't lie at the end of the day. So I think that's kind of an interesting indicator that we're going to be doing in terms of doing our monitoring and evaluation. But I'm wondering, to the extent, I think it'd be also interesting maybe for everybody here to also hear your experiences with, you know, you have macroeconomic sort of factors at play when you're also trying to do the reforms, right? Which just adds a whole other layer of complexity on these types of things. So any experiences that you want to share with the group, just in terms of, you know, you've got the macroeconomic at play, you've got maybe a lack of political will, you've got, you know, less capacity, absorption capacity, because maybe the countries are just donor fatigued, you know, or they have just too much coming at them at that time. So it just would be interesting, I think, to talk a little bit about that for folks in the room and online.
No, on that front, so on the macroeconomic front, before we kind of go into a certain project, so it's usually request-based for us, of course, with some solicitation, promotion of best practices, which then kind of bring about requests. But we also internally speak with the bankers, with economists, as to, and we do have offices on the ground for all these, in all of these countries, whether that's a good idea in the environment, whether there is actually, whether they've seen demand, whether they've seen what is their field. So that's how we kind of make a decision on that. And I think on the point around the actual client being fatigued, or it's the profile of the client is crucial. You have a minister with a commercial bank background. I mean, it just, the project is totally different because they understand and I think it was exactly in Morocco where the project slept for 3 years until a new minister with that background came in and pushed things because he understood the actual importance of it. So that's actually key, and it also depends where are they coming from. You have, it's not the same when someone is coming from after, like, if they want to tick a box, that's okay, but you know, you need a lot to do beforehand to manage the expectations. But sometimes they come because of the demand, because investors have been coming there and asking for like some licensing regime to be in place. But sometimes they come because there has been a massive fraud case and they actually now want to regulate. And in those cases, they are like the paranoia level is super high, that you know you're not going to get an ideal regulation because they just want to include all these punitive provisions now to kind of make sure that no one else does it in the future. And it's usually kind of stifles and scares potential newcomers because it's a bit over the top. So yeah, that's how we kind of go about like navigating with our clients, but also with these sort of changing appetites, because mid project we have change of government, change of governor, they resign, they get fired, various reasons. But yeah, with our presence on the ground, I think we kind of try to manage that.
And I'm sure that I'm sure that you have the same sort of internal process that we have as well, where, you know, any project for, you know, law reform goes through an internal review and commentary, you know, across multiple departments, you know, with all sorts of different perspectives, etc. So, you know, so that there's institutional buy-in from us as, you know, the wider organization to, you know, to whatever the reform suggestion is at the time. And I think that the other point that, you know, one can never set aside, certainly in, you know, our region of coverage, is, you know, totally exogenous events. You know, there's been a couple just in the last couple of years, obviously, where there's nothing that you can do to plan for that.
No, absolutely not.
Yeah,
absolutely not. I think we've got, you know, a little bit of a sense of sort of, you know, some of the challenges and experiences that we've had implementing these types of reforms. But maybe we can, I don't know if there's any questions that any of you might have for us specifically, or anybody online that might have, you know, want to raise your hand and ask a question of our panelists, or even myself for that matter. Anything that's resonating with you? James, please.
Thank you. This is coming down to my level now. I just wanted to ask you if I got a sense that you were skirting around the issue a bit, but are you comfortable with the implementation platform that you have, or the ability, or are there times you get really frustrated by your lack of ability to move as quickly as you might? My own experience with IFC World Bank collaboration, I can go into that later, but I just want to know, are you ever frustrated by that, by your lack of ability to complete or to get things done?
I don't know. Yeah. So I would say no. That's and again, it all. I think that's sort of, that feeling is amplified because of our new approach towards looking at the impact in a bit of a broader way, because it takes us such a long time to put the law into place. And then we're like, okay, most of the work is done now. Let's see how the market takes this up. And so the frustration can be either because the law is taking such a long time to actually be be approved. And it's not because it's being deliberated in detail. It's not because there's such a big, it's just staying there. So that's something, and that usually happens when our champion within a client leaves or moves somewhere else, or the government just changes and shifts. And so you cannot escape those. And, you wouldn't believe, like, so there's always something happening in the prime. We're like, can we just get a break for once somewhere that everything goes smoothly and this is actually being developed? And we have certain jurisdictions where we managed to do that. But then, that is done. So the authorities did their job to our satisfaction. But then you see that the market is not maybe taking it up. So that's the other frustration, that when it comes to now, we are running these impact assessments of our projects. We did, for example, a factoring law in Kosovo. We did a factoring law in Montenegro, 2018, 2017. And we're looking, okay, how many platforms came in? For example, are there new answers in the market? We know banks are offering it. What about new answers? And we see 1 in Kosovo, 2 in Montenegro. Okay, for the market, maybe that's it. We'll see what, now we look at the volumes. Okay, how many SMEs are actually getting this? So we are causing sort of if I didn't do this, maybe I wouldn't be frustrated, but because we're looking more deeply, we kind of creating causes for ourselves to be more frustrated in a way, because we want more impact, and we want things that we develop that don't just stay there, that people actually know how to use it, and they do they actually have the impact that we want it to have. So,
and there are the funding constraints as well, because to get funding to enact new legislation is easier, right? That's much easier. The passing of the new legislation, that's the cool, sexy bit, and you all write press releases going, "Ooh, here's our new laws." The capacity building, the on the ground, day by day implementation of that new law. That's not cool and sexy, and but it costs a great deal of money at the same time.
But even the training, I think for the donors, if we're looking at it from donor perspective, it's kind of measurable, because you can say, I trained 1,500 people on this. So I think for their own internal records, it can also pass. I think what we see, and we discussed, what we see from donors sometimes, it's, okay, you develop this registry, now it's the maintenance. And the client doesn't even want to maintain it. And the donor is like, okay, hold on, we helped you with all of this. They need to pay up a bit. They need to kind of show their commitment, not just through in-kind sort of contributions, but through some actually monetary contributions. And when that's not there, you kind of it's a bit of a difficult sort of interaction with the donor as to why that's not happening, because it's almost like them being ungrateful about all the.
I would just sort of add that, yes, there is certainly a level of frustration, but mine is more, I think, maybe slightly different, in that I think the project timelines should be longer than what they allow us to have them to be. I mean, you're asking for people to make a monumental shift in the way they're approaching, financing and building their capacity, and, financial institutions to train up all of their loans officers in the risk department and the legal department, right? So take Ethiopia, for example, or a place like Madagascar. I mean, some of these places have huge, significant challenges just in terms of the capacity within these other institutions that you don't really have direct control over, right? You can give them some learning, but then you think, oh, I'm going to give you a 2-hour workshop and you're going to go back to your office and be able to do this. I mean, that's just not realistic, right? So you're kind of limited by both the length of your project, the budget of your project. And then, so the question that I always kind of ask myself is, nobody, and I'm from Canada, nobody would expect me to go into Canada and do PPSA reform at a national level with a $500,000 budget in 3 years. They wouldn't expect you to do that. So why would they expect you to do it in a developing country, right? I mean, let's be real. So that's where my frustration comes from. But I know we're probably running out of time, but we have 5 more minutes. So any other questions? Yes, please, Hamza.
Thank you very much. I think the work that international and multilateral development banks do is incredibly impactful and plays a very useful role, particularly in developing countries with access to credit issues and investment issues. Of course, the work you do in law reform and policy reform is a small part of your overall business. And so I was wondering how much impact the work that your teams do then perhaps has on overall lending decisions or overall business decisions that one of your banks might be taking in different parts of the world. Thanks.
Just
Thank-
because you do these kinds of, deals.
Yeah, that's a very interesting question. And I mean, I actually think it's sort of the other way around in a sense. It's all sort of tangled up together and it's a little bit hard to unpick it. But, without question, in my view, the broader law and policy reform narrative needs to be part of, the broader strategy. And we actually do build that in what we call our country strategies. Law and policy reform angles are always taken into account in those conversations, quite often in very broad terms, which is helpful, in fact. So we like that. But that would never be the driver for investment decisions. It would be, a facilitator, or, the investment work that we do, be it on the, sovereign or the private sector side, would then feed back into the law and policy reform work that we would look to do as well, where you sort of, you identify areas that may need some further work.
Yeah, maybe also just because we've had this sort of discussion internally. So for a while, our team were kind of like quote unquote blamed for not being very close and sort of joined up with the rest of the bank, especially the transactional side, because we would go and do something, not necessarily for example, and I keep mentioning factoring, but the bank wouldn't necessarily go and invest in an NBFI that's doing factoring. We do have our factoring sort of trade facilitation program, which does it, but it wasn't necessarily something that they would be asking for. And the discussion is, okay, if I want to do, like, if there is a demand for something, like, especially now that we've been dealing in fintech in a certain country, there is this leapfrogging potential in that country. We see that the actual conditions are ripe for us to do that project. The banking sometimes say no because we don't have, and people on the ground may say no because we don't see, like we don't have transactions in that space. So let's not maybe go there now. Maybe it's a bit too early. But then 3 years down the road, they come to us and say, oh, but we want to invest in a payments company. And we're like, yeah, but we didn't get that sign off. If we would have, maybe the regulation and legal side would be good. In a way, my argument to them is that with the legal reform, we probably have to move a step ahead. I mean, we need to be in line with our strategy, but even if we are slightly removed from it, we need to be a step ahead so that the bank, and we are not first movers by any means. So after a couple of years, if that comes up to be an actual investment priority for a bank, the framework is there. You can actually do it. Maybe some companies may have popped up by then. So.
And I think for us, I mean, it's sort of similar, right? I mean, the program overall needs to align to what the corporate strategies are. And so right now for IFC, it's, climate finance, food security, gender finance, these kinds of things. So the program needs to be positioned to help support that on the advisory side of the business. And then on the investment side, you need to really help those guys connect the dots, right? So why is your program relevant to that side of the business, which is a large part of the business on the IFC side? When we were part of the World Bank, that discussion was basically mute, right? I mean, because they're very policy oriented folks. IFC side's a little bit differently. But yeah, it's similar challenges, right? It needs to fit the corporate direction, but then also comes down to the national development policies or the country strategy, country partnership frameworks, we call them, for those things. And the program needs to align to that before you can deliver on it. So it's a challenging space. I always get, I'm super enthusiastic about this stuff because I just think can do so much for an economy. I think as we all are, right? We're very committed in this since, most of our careers are built on this space. And so we're very committed. And I think, you can be enthusiastic when you go in and you're talking to the respective economies and jurisdictions and policymakers. But then going back to one of the comments that Milot said is, they can get caught up in that enthusiasm, but then that wanes when they realize this is actually a lot of heavy lifting to do, right? And it's over a long period of time that has to go. And you're not going to see results right away. You're going to see them, a little bit farther down the line, which I think is why it's also important maybe to have this coordination, because then, when you run out of steam, you can hand it off to your partner organization and say, okay, it's now your turn to kick the can down the road a little bit further, right? But I don't know. I think maybe we're winding up for time. Yeah, Will. So if no other questions, maybe I would just thank my panelists. I hope that you found this a little bit of informative and some takeaways from this, that perhaps as you're thinking through sort of these larger reforms that you're putting in place, build in some time and patience for those of us that are on the ground trying to implement them. And if we don't get it right 100% of the time, I think we probably, if we can get it 80%, then usually that's my marker that we've done okay. So with that, I just like to thank everybody, and I guess I'll hand it back to Will. Yeah.